Welcome to Realty Trader Talk podcast. I'm Jordan Kane, the host, sponsored by realtytrader.com, sponsored by Chaser Water. I have an amazing guest today. She does more committees, real estate, mortgages. She does so much local, statewide. Andrea Anicito, how are you?
I'm good. Thanks for having me.
Thank you for coming. So if you could do me a favor, because you are on so many boards, mortgages, real estate, can you go down the list of everything that you're doing? Women's Council, tell me.
Sure. So first, I do mortgages and real estate. So I'm with Florida Mortgage Team. I'm the branch manager. We're out of Fort Pierce, and then I also work with Link Real Estate as a realtor. I've been doing mortgages since 2004, and I added real estate in 2019. And then there's a laundry list of other things that I do. We'll start with, in 2019, I started becoming pretty active with Women's Council of Realtors. So I worked through several different positions with their board and became the president in 2020. So it was 2020 and 2021. I was the president locally for St. Lucie County. And then I moved up and started working with the state on a couple different committees. I finally ended with the state as their legislative liaison in, I don't remember, 22-ish. But that's also when I started becoming more active with our board here. So it was Our World. Now it's Miami Realtors plus Our World. So right now I'm on their regional board. This is my third year on the regional board. And then I'm also the government affairs chair for them. Florida Realtors, I've been a director for the last 3 or 4 years. I've also sit on a few committees for them. So it's research committee. I've done their, call it education committee because I can't remember the word for it right now, but I started with that one where we would actually screen the instructors and before they were able to teach the classes. That was pretty cool. And then, so now I do the research committee. I work on the 3 think tanks for them, and then for National Association of Realtors, I'm on their conventional financing committee. This is my 3rd year with them. And then locally, I'm also on the Affordable Housing Advisory Committee. I've served on the Historic Preservation Committee for the city of Fort Pierce. I try to get involved. I try to get involved as many places as I can. There's an incredible amount that we all have to learn about our city and about our associations all the way to the national level and about our industry. So, yeah.
You know, I want to thank you for all of that. That is amazing. You do so much. I don't know how you do it, which is going to lead me into my next question is, you know, we were just having a conversation about one of your amazing daughters and having an internship and traveling, and you told me this great story about going to Montana. So how do you manage home life, realtor life, mortgage life, committee life? How does Andrea Anicito do it?
I would not recommend this method to most people, but it works for me. When I go places, my laptop goes with me. So I can work from anywhere. It's the beauty of the mortgage industry. You literally can work from anywhere in the world. And I have. So I would wake up and work in Paris. You know, we're on different time zones, so it makes it a little bit difficult. But, you know, you can also do anything from your phone now. And I'm good at communicating, and I'm really good at my job. So it makes it easy.
So what is one of the biggest setbacks that, you know, before I ask you this question, I do the same. My wife does real estate, and we both travel a lot. So we just took a cruise, and we were gone for 14 days. And if you're in the real estate industry or the mortgage industry, you have to, you know, travel with a laptop. Even if we're at Universal, you know, we try to be present for our boys, but we're still taking calls, walking over. One's picking up, oh, you need a hot dog? We're going to go over and get it, or a corn dog, and the other one's going to talk, or vice versa. And you have to have that in that industry. It never stops, you know, in the real estate industry.
And I want to add to that, too, because I feel really strongly if you address an issue now, it's you're not trying to take care of 10 at one time. If I can answer a quick phone call right now and I can help you with the situation, we can put it, you know, solve that problem. You're not stressed out about it for the next 3 hours. Let's do it. Let's just take care of it. It's a quick phone call usually.
Absolutely.
Yeah.
It usually is. It usually is something that is not a giant fire.
No.
So what do you see as one of the biggest setbacks on, I would say, juggling life and all of these different boards? Is there one? Is it tough?
So let's just have a real conversation about that. It's expensive, right? So my kids, they compete all over the country, mostly in the Southeast. They compete in shooting. So we go to a lot of tournaments. A lot of it's over the summer. At the same time, and I'm currently in this mix right now, at the same time, there's 2 different places I need to be for my roles in these volunteer groups. So we're going to drive to South Carolina, and thankfully 2 of my kids drive, and so they're both going to this. But we're going to drive to South Carolina. They're going to do a competition. I'm going to be there with them. And then that Sunday, I'm flying out to D.C. They're going to drop me at an airport that's close by. I'm going to fly to D.C., and then I'm going to fly home from D.C. They're going to pick me up from the airport. It's an added, a little added extra. Had I flown from home and done the round-trip flight, it's a little bit cheaper. But having to be at these different places, hotels, flights, things like that, it's expensive. That's the drawback to it. It is 1,000% worth it.
100%. Yeah.
When I go to NAR and I'm sitting in a committee meeting. So the Conventional Financing Committee, just to give you an example, 2 years ago I'm in the committee meeting. Fannie Mae was there. We had a representative who was from their top management for Fannie Mae, and they were actually asking us questions about how to improve financing options. We talked about the possibility of portable mortgages, which is now something that you heard the president talk about, 2 years later. So I don't know if that conversation started in our room, but I would love to think so, right? We are making real change happen that is positive for consumers, which is why we do it. That's why I do it.
Well, absolutely. So where do you, with realtors, if realtors weren't involved, or realtors that need to be involved with legislation and politics, where would we be without realtors with, like RPAC and that?
Okay, so I'm going to give you a concrete example. My best friend from college, she lives in D.C. Her husband is a lobbyist for the meat industry. So I went to D.C. and just because I get the evenings off, I got to go visit with her. So we're sitting in her house having dinner, and he says to me, "Man, what's it like to be part of the Realtors and part of RPAC?" He's like, "It is such a strong advocacy group. I can't imagine being part of that." Here's the guy who's actually lobbying for the meat industry who's saying this to me. And it really gave me a chance to sit back and say, oh my gosh, we really do have an amazingly strong association or advocacy arm, right? So if you really look at it, we are the largest trade association in the country. So the things that we're asking for is what every American wants, right? They all want to be able to own a home and have rights to their property. So we're not asking for anything crazy, but the size of the lobbying group is substantial. So, and they're doing good work. Now, I totally forgot your question because of that, but.
Well, no, it was just like with RPAC and realtors. And myself, I'm probably the least political realtor. But now, as my journey where my journey is today in life and where I am, and I see my 2 boys sitting there, and they're looking at me, that they want somebody to help guide them, and I want to be able to help impact my community for them. I'm their dad. So I'm trying to now grow in that space. I went to an amazing event with you the other Friday, which I can't even believe how you got that many people in one room.
That was pretty cool.
You and a few other people. I'll let you tell about it. But it's just really like realtors do have such an impact. And I'm now just understanding how big the impact is that we have. So what do you see like on the local level? Like, is there policy or anything that, as a realtor we can help or change or?
Yeah, absolutely. So you have city and you have county boards you can join. There's actually impact you can make locally just by being part of one of those boards. So as being part of the affordable housing, it has a really long name, but the Affordable Housing Committee, right? Advisory Committee. So we've actually started to make some steps into possibly helping with some grant funds, which come through SHIP, and I can't really talk a whole lot about where it all goes because it hasn't come out yet. But there's, just being in that room and having those conversations, we're trying to figure out, how to carve out a little bit of extra funds to help people buy homes that really aren't there yet. If we can figure that part out, you're going to help people who really have been trying for a very long time to be homeowners, and they just haven't been able to make it there yet. So, starting at the local level, any place that you can become involved is a good place to be involved. And not everybody can do all of the committees. You have to have a passion for what you're doing. Wherever even as a coach, you're involved in helping, grow the community. So everywhere you are, any place you can be involved, I say get involved.
In Florida, affordable housing is, one of the big issues that's, talked about. How big, in your opinion, is the problem right now in Florida?
That's a really hard thing to answer.
I'm glad I asked it then.
I think it's like a give and take all the time, right? So if you would have asked me 3 years ago, where's the biggest problem? It would have been homeowners insurance, right? Homeowners insurance was out of control expensive. There was an article that came out a couple of years ago that said St. Lucie County all the way to Miami, we were the top 5 in the country for homeowners insurance costs. And then over the last couple of years, the number has decreased substantially. So I'm super happy to say my insurance actually cut in half this year. When I got the renewal, I was like, is this wrong? Somebody screwed this up. I'm going to take it. I'm not saying a thing.
Right, of course.
Right? So, but yeah, it got cut in half. So that was huge for us personally. There's still a struggle though. There's still a lot of people that still have high homeowners insurance bills, whether it's the age of the house, the age of the roof, whatever it may be. We have in St. Lucie County itself, we have a large number of homes that were built before, 1990. A lot of them have pretty expensive insurance, and there's nothing, you can't just change the year of the house. So I think there's still work to be done there. I'm really interested to see what they're going to do with taxes, to see, what they're going to do with the property taxes on the ballot. I have no idea. That should, hopefully that will help alleviate some pain.
That was a big conversation piece the other night at the event between, and they were asking from the national level, and Brian Mass is like, that has nothing to do with me for that level. You can have to pass it on everyone, all the realtors, because that's such a big issue. Me also, I have, I do roofing, so I see it every day. I just, right before we started this, actually, a person was texting me about they got a letter and or an agent reaches out, but this person had a letter and they need to get a new roof. They have a year or 6 months to put it on. But one thing that they do see is that if they put a new roof on, then they can get a new wind met, which also can be help from a realtor, introducing them to an inspector, and then it drops their insurance down. So I think they're trying to figure it out.
Do you guys push the My Safe Florida Home program?
Tell me about it.
I love that program.
Okay.
Because I feel like the government should give you back money sometimes, right? So if you qualify, and you have to look at the qualifications because I haven't looked at it in about a year, but they will give you $2 for every dollar you spend, up to $15,000 toward hardening your home against the hurricane. So I use the program. I talk to all kinds of people about using the program. it's amazing. So if you can get, if you have a $15,000 roof, if you don't have that secondary water resistance barrier, if you're going to add that and you get your roof, save yourself $10,000.
So
it's a deal.
Yeah, that is a very cool program. I have used that. The owners or sellers will put on the roof, and then they submit the paperwork, and then they get reimbursed at the end. It's a very cool program.
You do have to front the money up front, unless I think there's some income guidelines where you don't have to do it if you're under a certain level of income. But it's great.
Oh, absolutely.
It helps people to, first of all, you're hardening your home, which you need to do anyway. So we're going to have better results after the hurricanes if we have any more, which hopefully we don't. Hopefully. Just skirt around us. Keep the tornadoes away. But yeah, it's better off for if you ever want to sell your house, if you don't have a new roof, it makes it really hard. So
you're super knowledgeable about the programs. There's also a Hometown Heroes program and some other programs. What programs are you that you can share with us?
So we can talk about Hometown Heroes. Every year it comes out a little bit different. So the funds are used up for this year, but typically in July, usually July 1st, but we've seen it come out July 10th or 15th. So just keep an eye out in July for that program to revive. So this past time, the way it worked was if you are a veteran, first responder, nurse, teacher, you had the list of professions. So as long as you worked in one of these professions, so that you're considered the hometown hero, up 5% of your loan amount up to $35,000 was able to be set aside for you in a we'll call it a silent second mortgage. So no interest, no payments on that second mortgage, but it could become your down payment and closing cost funds. So as long as you're fitting into the category for the hometown hero, you basically have your down payment and part of your closing costs covered. And you could do that with an FHA or conventional loan. The best part of the program, though, yes, there's some money that gets put into it. My favorite part of that program is you actually have a better interest rate than most interest rates that are published. So it really saves that hometown hero for the life of their loan. The down payment and closing cost funds, they do sit in that silent second mortgage. So if you ever refinance or sell, you do have to pay it back. It cannot be resubordinated, but that's the money that's supposed to keep the program going for the next one.
So is that like for teachers and what's all the people that fall in that category?
There's a huge list. But basically, if you work in the medical field, if you work in education, I'm not sure that it covers college, but I think as long as you're K through 12, even preschool teachers, it covers that. Police, fire, veterans. So if you don't qualify for a VA loan, you could use this as a veteran. There's a few cases where you don't qualify for a VA, so it's a good option for there. There's a huge list though.
All of the veterans and the medical field. One thing that I hear a lot is that they ask obviously about interest rate. So do you think we'll ever see 3% again?
No.
Never.
No.
It's not happening. No.
All the predictions say 5.25. I'm curious to know when they have these predictions of 5.25, is that FHA or conventional? Because usually there's a good spread between them. So if we're talking conventional at 5.25, that's even better news for people. So, yeah.
So if we're not going to see that again, what are, because people have to start preparing for that. What are some of the things that you would tell a first-time home buyer, say 6 months before they're going to buy? What should they start doing to prepare? This is where interest rates are. This is where we're going to be.
I think the most important thing people can do is work on credit. Find somebody who can pull a soft credit report or look at your Credit Karma or your, most credit cards have that like CreditWise snapshot or whatever it is. Look at your credit, because the better your credit, the cleaner your credit, the better your interest rate's going to be. So first thing, you want to bring your credit balances down so that you're not, maxing out credit cards. You want to do that anyway because you don't want to be paying that and a mortgage at the same time, right? So, you only need, in most cases, you only need 3 open active trade lines. And a trade line is a credit card, a student loan, a car payment, mortgage, anything that's going to show up on your credit. I want to say it's Equifax, but it could be Experian. It's Experian. They do the Experian Boost program where they'll put your utility bills on your credit.
Oh, wow.
So you can actually add that as a trade line, and then you don't have to open another credit card. So, there's lots of credit vendors that will come in and tell you how to improve your credit or what to do. You can find most of that on Google also. Save yourself the money, but get your credit ready. That to me is the most important thing you can do when getting ready to buy a house. Secondarily, you want to make sure that you have about 7 to 10% of whatever you want to buy saved. It can come from a 401k. Do you know about the 401k hardship withdrawals?
Never heard of it.
Haven't?
Please tell
Really?
me.
Okay. So if you have a 401k, almost always there's a hardship withdrawal.
Meaning
which-
what?
So
What's a hardship withdrawal? What does that mean?
So it lets you pull a portion of your 401k funds, but it not necessarily for a hardship. You can use it if it's going to be your primary residence.
Okay.
So you can pull a portion of those funds where they're not hitting you with a penalty for pulling it out. And it's not a loan, so you're not having to pay it back.
So it falls underneath the hardship category that you don't have to get taxed on or pay back in a certain
You're still
way.
getting taxed on it because
Right.
it's still pre-tax dollars, so
Okay, either
government's
way.
going to get their cut.
Okay.
But
You're not going to get a fee.
you're not getting penalized for taking it out.
Penalized,
Usually it's like a
okay.
10% penalty or 20% penalty depending on your company.
Okay.
So anyway, you can pull that. You can use that for your down payment and closing costs. It's a pretty simple process too. So if you have a 401k, that's always an easy place to get additional funds. Now, if you have 6 months to save, if you're not able to save, let's change the way I said that. You should be trying to save at least your mortgage payment every month. That's a good way to know if you can afford to buy that house.
So moving into it, you would just save your mortgage payment, talk to a mortgage lender, get pre-approved, idea of where you would be in a purchase price, and then let's say it's $400,000, your payment's X amount of dollars, we'll say $3,000. Start ahead of time before you find the home, spend 6 months putting that money away. One, it'll help towards your 7 and 10%. The next piece of it is you'll know if you're going to be able to swing that or not.
Right.
That's a great idea.
Right.
Yeah, very cool.
And then I would start just kind of keeping an eye on the market. Talk to your agent, have them set you up where you're getting the houses that are in that price range, not so that you're falling in love with a house and wanting to see them, but so that you understand where the market is and what you can expect to find when you go and look at those houses. If you're in a 200,000 price range and you are not wanting, a 2-bedroom house, talk to the mortgage broker. Let's talk about how you can change what bracket you're in. How do you adjust to be able to get into what it is that you really want to be into? Whether you need to save more money, whether you need to, for greater down payment, or, do you have 2 jobs? Are we looking at 2 jobs and do we have those 2 jobs for 2 years at a certain point? Optimize what it is that you're looking for so that way you're ready for it. 6 months is a lot of time to get ready to buy a house.
Absolutely.
I would love somebody to come 6
right,
months ahead of
6
time.
months, you're very prepared. You're ready to go.
Right.
Right. Ideally, it's like, hey, I found a house I like. What do I need to do?
Right.
As the general scenario you get.
Right.
So for entrepreneurs, people like myself, realtors who write things off, is there programs or is there products or something for us,
So, ideally, you would like to go with a conventional loan first, right? So, in the pecking order of loans, how, as far as interest rates and the structure of the loan, typically you'd like to go and see conventional FHA. If those don't work, of course, VA is my favorite loan of all. We can talk about that later, but FHA conventional unless you qualify for VA, right? If those don't work for you because you've written too many things off or you're, very careful with your taxes, right? Then you want to look at a bank statement program. So there's specific programs that were designed for business owners, and those are your bank statement programs. They're going to look at the deposits that go into your bank account. We're going to average those over 2 years or 1 year, depending on your situation. and then that's going to become your income. So for people that put all their money in the bank, that works. If they don't, that's a whole nother conversation. There's also another program that is very similar to a DSCR program, which is really for an investor. So it's based on how much you can rent the house for. That the income from the house becomes the income for you for the month. But this one is actually for a primary residence. So if it's somebody looking for for their home, and we're not able to really find their income, there is an alternative for that also. So there's so many different loan programs, though. I mean, we have 285 lenders that we work with. So if there's a program, we've got it.
So do you do, like for the DSCR, do you do other lender, I'm sorry, not lender, do you do other investor loans? Is there short-term loans that you guys do, like 2 to 5 years, or do you only do 15 to 30, or what?
No, we work everything from private money all the way to, huge commercial investment banks. So there's just a ton of different options. If you need hard money, we can do that. Typically, you're going to see those investor loans are usually 2 to 4 years. We have some that are a year. We have fix and flip programs. We have, that's where if you want to purchase the house that needs renovation, they'll actually give you the funds to renovate also. The sky's the limit. There's so many loan programs out there. It's wild.
Awesome. Yeah. So what are you seeing today with buyers? Like the biggest, well, let me phrase it this way. What are some of the biggest financial mistakes you're seeing today from buyers?
Mattress money.
Mattress money. Like what you mentioned a minute ago, when you're not putting it in the bank. And you cannot buy a home with a sack full of hundreds. It just doesn't work.
Yeah, we joke about, on the closing disclosure, the last line, it says cash to close. You can't actually use cash for that. So you do have to put the money in the bank. And if you're saving, I understand like the cash system. I think Dave Ramsey pushes the cash system, which is great. Because it does help you see what you're spending and what you're saving. But when it comes to buying a house, not everything's intuitive. You really do have to keep your money in your bank account. Besides
Cash, what are today's buyers, the biggest reason they're getting denied?
So my buyers don't get denied.
Just want to put a caveat out there for anyone who's looking for a lender. If you're trying to buy a house today, her buyers do not get denied. So reach out to her.
Before I send somebody out shopping, we make sure that they have a solid pre-approval done. So I'm looking at credit, I'm looking at assets, I'm looking at their jobs. I did a calculation fairly recently. It was like 99.3% of our buyers, since I've started doing this, have gotten approved if they've gone to contract. I had one guy who didn't because he leased a car. So he leased a car in the middle of the process. He thought that he could turn in his leased car and get another one for $200 more, and didn't realize that would be a problem. So anytime that you are buying a house, when it comes to credit, don't open or close any accounts. Make sure you're paying them on time. Just try to keep everything status quo, from the time that we pull credit until the time that you close on the house. After you close on the house, by all means, go lease your car. Please don't do it while we're in the process of the loan.
Through my many years in this industry, I've had that scenario happen to me. And, you try to have the upfront, I call it upfront contract or an upfront conversation to let them know it doesn't matter. Don't finance a couch for the house you're going to, but don't finance anything.
Do not buy your furniture first.
Do not buy your furniture first. Do not anything. Don't take out your child's $500 credit card you want to get them started with. Don't do anything. And sometimes, you get caught up in the transaction, and that's why it's good to have a great support system of a lender, someone who can help you with these conversations. If you forget, there's just no coming back from it. It becomes a giant issue.
I mean, sometimes you can come back from it, and there's ways, but it usually takes extra money. And a lot of people are spending
to pay it right
penny.
down. Right.
Yep. Yep. A lot of people are spending every penny to get to that closing table. So yeah.
So if you were going to advise your child, your daughter, on buying a house today, what would you say?
So I'm a fan of fixer-uppers. If you ask my husband, I always see the potential, and then I walk in and I'm like, take that wall out. It's his very favorite phrase that I say. He hates it. So, yeah, I would just look carefully, find a house that's affordable within the neighborhood that you want, because you can't change where it's at. Make sure that you're saving enough money to make it affordable, but plan for 5 years down the road, not right now. So in 5 years, what are your taxes and insurance going to look like? I probably shouldn't say this, but don't buy a condo. Until they work out the condo laws, I'd stay away from them. I'm really sorry to any agents who have condos listed.
Well, that's a big issue, and I'm one of those agents who have condos listed. So yes, I'm in that category, and just got another, I think, $27,000 assessment on a property that already just got a $20,000 assessment for a roof. So yes, there's problems in the condos market.
Well, hey, quick plug. I have a new equity line product that does not require a condo assessment.
Oh, really? So you can loan on condos with assessments, is what you're saying? So explain this to me, please help.
So if you need an equity line of credit, and let's say that you have $50,000 in assessments and you've got $100,000 in equity, we can do a loan where you don't have to provide the milestone inspection reports. You don't have to do all of the condo documents. It's just an equity line. So it's a second mortgage, or it can be a first if you don't have a first mortgage.
And that's to help pay the assessments.
You can use that. You can use those funds to do whatever you want. You can pay off debt. You can pay your assessments. You can renovate the house. Here's your money. Use it as you need it.
That's great. Matter of fact, we're going to talk about this after this podcast, because
Okay.
that would be fantastic for this specific seller that I'm working with.
And it's easy. It's funding in like 5 days. Super easy.
So, renting versus buying?
Buy all the time.
Buy all the time.
Yep.
Wow. So what would you advise somebody who's renting today, who is questioning with the mortgage rates, with the taxes, with the insurance, why should I buy?
Why not pay your own payment, right? When you rent, you're paying somebody else's mortgage, right? So pay your own and then capture those gains that you would make. There's no other industry where you can make the kind of money that you make in owning a house. So it's your money. All of that appreciation, you're giving it away to the landlord. So my advice would be call a realtor, call a mortgage broker, somebody who's been doing it for a while, and ask them, how can I get ready to do this? They'll help you.
I feel the exact same. I think, in the market today, if you get into it, even if you're concerned about, if I buy today, it might go down. If everyone always says, even the stock market, you only lose if you sell. But if you look at the history of the market, of these lots in Port St. Lucie that were 5,000 are now 150.
Right.
If you're not going anywhere for 5 to 10 years, you will not lose in Florida real estate. It is not getting any warmer up north. The snow is not going to stop coming, and people will keep coming down here. And there's only this much land.
And real estate's a long-term game. Like, you're playing this for a long time. We had the crash in 2008, and so we owned a house back then. We bought it for $120,000. It dropped down, the value dropped down to $40,000. Just a couple of years ago, we had sold it, basically when we broke even, we sold it. But somebody who had bought it, they just sold it for $350,000. I mean, you have to if you hold on to it, it will turn around, always.
100%.
You'll make money on it.
I love to tell this story. I was, I can't think, but I was in a room, and they were asking questions, and they said, there was a room of like 60-year-olds. And they said, with your retirement today, the highest percentage of your retirement, this is the gist, was it from your 401k, your real estate? Raise your hand if it was 401k. You've got a quarter of the room. Raise your hand if it was real estate. You got 90% of the room. There is not one person who hasn't, if you pay in 30 years, you're going to have this, lump sum for your retirement. It's the best decision, people can make, and do it as young as you can.
Yep.
That's definitely long-term play. Okay, I want to talk about from the women's council standpoint. We didn't get to talk about any of that. I'd like to. What advice would you give a young woman today in getting into business?
As a realtor?
In business in general, and then as a realtor.
So, I mean, I would give anybody the same advice, I think,
Okay.
male or female.
All right.
If you're getting into business, don't be afraid. Make sure that you're in every single room that you want to be in, and learn as much as you can about what it is that you're going to be doing. So my daughter, she's 19. She just became a realtor. That was the advice I gave her.
Okay, so right, you were easy to just relay that right back.
Right, and what I realized in giving her that advice is it was mine, right? So this is the way I choose to do business. I always have done business as a referral type of business. She does it different, and that's okay. So she wants to use social media. She wants to, what did she call me? She called me a boomer the other day because we made my friend and I made a video, and it was definitely not to her standards. It's as good as I can make it, though, right? So I'm okay with it. It's going on I put it on my Facebook.
I hear that at least once a week.
Yeah.
I have someone who helps me with my real estate content, and they love to call me a boomer all the time with all the different.
I didn't realize that was a slur.
I guess that's the where we're at today.
I'm okay.
I'll
with
take it.
I'll
right,
take
the
it. That's
same.
it.
It's good.
So yeah, you can't hurt me. Can't hurt my feelings. So anyway, but yeah, she's doing it different, and that's okay. Find your niche. Find your way that you want to do business, or the type of business you want to do, and you got to try a lot of things. Like it's like all the princess stories. You got to kiss a lot of frogs before you find out what yours is.
Find the right frog, right?
Yeah, find your prince.
So, what was one piece of advice that stuck with you that someone gave you when you were starting business? Can you think back?
So my dad told me, my dad ran his business very similar to the way I do it. He told me he used to take a stack of cards every single day, and he would make sure he passed out every single one of those cards in his day. And if he didn't, he would end up adding them to the stack the next day. And then he had to pass out that many more. So it gave him motivation to make sure that he was passing out enough cards every day. In the beginning, I did that. His other advice, it wasn't really advice, is that way he, watching what he did. They used to say that if there was a room with more than 2 people in it, he was one of the 2 people, or he was one of the 3, right? So I try very hard to be as many places as I can, within reason. I prefer not to do anything after 5.
As much as possible.
Right.
I know. Again, in this business, though, it's just not realistic.
No.
We've developed, my wife and I have developed different things between setting our phone down or leaving our phone. I try to go 4-wheeling with the boys, and I won't take the phone, or we try to, because there's really one thing. I watch a lot of the big guys on like YouTube, and one of them said just last night, I was watching it, and he goes, "There's really no giant emergency. Things that sometimes we even feel are giant emergencies really aren't." And I'm trying to start to, that really stuck with me. So I'm going to really try to start utilizing that, because I will get distracted quickly, especially when it comes to business. So, there's important pieces. Yeah.
A friend of mine, she's a title attorney. We say all the time, nobody dies in real estate. And we hope that nobody does. But everything is able to be handled. It may take a little bit more time, but you can handle it all.
Definitely.
Yeah.
So what's one challenge that you overcame that made you stronger, that made you this person today?
Jeez. You only ask easy questions.
I want some good ones.
Go way back. Mm-hmm. So I'll tell you, getting into mortgage industry, right? Mm-hmm. So I used to, when I first got out of college, I programmed computers. And so I was writing all the code for Riverside Bank, doing all their reports. And I hated being behind all those locked doors. So it was me and 2 other people in the room, and that was it. So that's actually what drove me to get into the mortgage industry. So my dad was an attorney, and he had attorney's mortgage service had just opened. So he said, well, come and work and do attorney's mortgage service. This is going to be great. You can work in the office. You can do mortgages. You can, ramp it up, and you can do this new job. And I was like, you know what? That actually sounds awesome. Until 6 months in, they didn't approve anybody at all. Like 800 credit score, 30% debt to income, 20% down. You still didn't get a house, right? It was terrible. So then I went and I said, Dad, I love you, but I have to make money. So I went and I got my mortgage broker license. And then I worked for somebody for a year, actually Renee DeLessio. I worked for her for a year. On my 1-year anniversary, I left her and opened my first company. So that was the Lending Center in downtown Fort Pierce. So I had that 2005 until 2008. And then the crash happened. We were driving home we had the kids, we were on vacation, we were driving home, and that was it. The phone stopped ringing. It was incredible. At the time, we were doing 30 loans a month. It was wild times, right? It was the Wild West of lending, which needed to shut down. But anyway, so it became, what do we do? And I told you before I was going to tell you. I actually left there, and I went to, my uncle was a teacher, and he goes, come teach with me. It'll be easy. And it was easy. Setting up my classroom was great, right? They hired me, and I started getting my classroom. It was real cute, and then the kids started walking up the ramp toward me, and I had an oh my gosh moment. What do I do with these kids?
That sounded great until
oh my gosh,
right.
What do I do? But I taught middle and high school for the next 7 years. And you talk about a challenge. Every day was a challenge. And every day was a reward. So I think that teaching experience is probably the greatest hurdle and experience and everything all rolled into one. Taught me a ton. So when I come back to mortgages 7, 8, 9 years later, whatever it may be, when I came back and reopened my company up, it came with how to teach, how to explain, how to break things down for people, and also the drive to be involved with the curriculum committee at Florida Realtors, right? So all of it kind of goes hand in hand with how it pans out.
Life's funny like that. My story back at that time is I didn't have my real estate license yet, but I launched what company I have now, realtytrader.com. I launched it back in 2006. And this used to be a website company on Port St. Lucie Boulevard. That's not there anymore, so I'm going to say their name. It was Digital Slingshot. And I thought I was going to be auto trader overnight, and the company, the real estate was booming. So I ended up spending a ton of money, more than I want to say out loud. And I launched it, finally just kept spending, I had to launch it. And it did really well. Like we were, agents wanted marketing, and it was before Zillow and all that even did for sale by owners and realtors on the same site. I had realtors and for sale by owners on the same site. And every time these agents were signing on to put their properties on, because it wasn't IDX then, you were actually putting them on. And this would crash and this would crash. So I overbuilt it. I didn't realize you just start just like a house. You make a foundation, then you organically grow it. And, then you put up a wall as people come in. I had all the walls and everything. I had the windows connected to the toilet. I had all the things that you're not supposed to do. So I went and just took the programmer right from the company. They weren't doing well, so I brought him in-house. And I said, listen, I'll just pay you direct. I need you to fix this. We're doing well. We had a phone room of 8 people, and then the market crashed. And that was that. So now today, I'm here and having a podcast with you, and Realty Trader's doing good. And, I just, back in the lead business, just had, my person who helps me with my CRM, as we just ran a new ad, and there's like 12 people that came in over the weekend, and she's like, we should have ran that during the week because you're too busy this weekend with your son's birthday and everything else. So, but very blessed, and just God's good and successful. But these lessons absolutely transfer into the future.
You have to be able to fail to have any kind of success.
Absolutely.
That was another kid conversation I had last week.
Yeah, well, that's a huge lesson, and that's something that they don't understand. My biggest failure in life has turned out to be my biggest blessing. It's made me such a better person. And if I didn't go through those trials and tribulations and end up in jail and have those problems that I did, I wouldn't have, one, the understanding of what life can really do to you. Then, two, the relationship I have with my boys today is just amazing. And I am so happy to be with them and to put the phone down and do this. Before, I just, was more worried about myself and my ego than the rest of it. So it is a true blessing going through those things. And God is so good.
Those egos get in the way.
They really do.
If we could all put those aside, everything gets easier.
Absolutely. That's my biggest downfall by far. God helped me out with that. I appreciate that, God. Thank you. That's good. So my last question today is going to be, when we do this in 5 years again, what do you hope is different between mortgages, real estate, and the Treasure Coast community?
That is a great question.
Thank you. I'm trying to do these good questions today.
So, one, I hope we have portable mortgages.
Okay.
I hope that we can start getting some outside of the box products that are solid.
What do you mean by portable mortgage?
So, a portable mortgage would be that if you bought a house today, and let's say your interest rate is 5%, you can take that 5% with you when you go to the next house. So you keep your same rate, but it's not necessarily tied specifically to that property. It gives you the ability to move that to the next property.
Right. It's kind of mortgage is tied to the person. So, okay.
Similar to like an assumable mortgage.
Right.
But assumable is still for the same property. So there's a lot that they need to work out in order to
right,
make that
of course,
work.
because property values and what are you doing, moving, right, by the water, not by the water, sure.
But I think that would give people a little more thought toward the future about moving. So we have a ton of people right now that are in those, let's say, 2.5% to 3.5% loans. It would never apply to them, because it can only be something moving forward that's added to your mortgage, right? So to those mortgage documents. But I think that a lot of them just, they're not moving because if you have that kind of mortgage rate, where do you go? Everything costs more, or you downsize, right? Even a lateral move costs you more because the interest rate costs more, right? Even if you take all of your money that you make off of that house and you put it down on the next one, what you have remaining is still higher. So it makes it very hard for those people to move. But I think that if we were to start instating those, it would make people think more long term. Well, if this is my rate going forward and I can take it anywhere, maybe that works better for me. One idea. May never work out, but I thought it was a cool idea. I'd like to see us start building up. So we have a huge need right now for affordable housing in St. Lucie County, right? Workforce housing, call it what you want to call it. But, we have a substantial number of people who are having a hard time affording where they live. It doesn't mean that they need to go into, a house with 3 families living in that same house. We need to build affordable housing. Some of the things that I've seen come out of, I think, last session with Congress, they put a bill in place that says that if you have a strip mall that has been in existence for 20 years or longer, and you take that, renovate it, downstairs being businesses, upstairs being affordable housing, there's some huge tax credit that you get from it, right? I'd like to see some of those things come into play, where we have some of the, if you drive down US 1, there's a lot of old eyesores.
Absolutely.
If we could turn those into multi-use housing for families, I know Walton 1 is one of those projects. The city PSL is putting that one in place. I haven't heard anything about that since the soccer stadium, but but I think if we could start doing some mixed-use housing in the area, I don't think you'll see that in 5 years, though. I think you're talking 10, 15 down the road. They're pretty substantial to projects. I know one of the projects that they were talking about at the county meetings was moving all of the county buildings to one site. So off of that 25th Street site, because they don't actually pay property taxes on the county-owned land. So moving the courthouse from by the water over to that, leaving the courthouse empty then, because they pay property tax on the courthouse because they don't own the property. So moving that over to a different municipally owned, I don't remember the code for it, but anyway, moving that off the waterfront area downtown. You know, what a great site that would be for something like that. So maybe, you know.
Well, that would be a great site for a lot of things. That's prime real estate. But just so they said to move the whole courthouse to the 25th Street.
Yes.
Is there like additional acreage that they own over there
I'm not sure.
that I'm missing?
I'm not sure.
That's a whole lot.
Maybe the parking lot?
Right. They're getting past, now we can build 10 floors up and they're going to put it all like that, maybe.
Right, I don't know. But I know that's one of their plans is they actually want to move all county buildings onto that one site.
I think that could open a whole nother podcast and conversations about our community and the choices some of them make, I tell you.
Yep. So anyway, there's, I think that there's I think you're going to see a lot of change in 20 years. I think you're going to see a lot of change in 10 years. 5 years is not very long, though. I would just love to see them fix Midway Road West in 5 years. Like, that would be amazing. But it seems like everything moves really slow with city and county. So, yeah.
So in 5 years, we'd like to see the city and county get more organized and work on some of their...
I'd love to see them lower property taxes. I think the county's doing some cool stuff, though.
That might be in the next 5 years.
That I think they will.
I think that as well.
I think they may be having a hand forced in that. But, I think the county is trying to be pretty proactive in what they're doing in order to eventually cut taxes. So like the inmate medical program, things like that they're trying to shift where there's high expenses into bringing it in-house and lowering those costs. I think those are some positive ways that they're trying to save money long-term. To be determined, though.
To be determined.
Yeah.
Very cool. Thank you so much. Thank you for everything that you do with all these committees and stuff. You are, really appreciate all that. I know our community does too. Thank you for coming on this podcast today. I really appreciate it.
Thanks for having me.
Thank you. Okay, this is the end of the podcast today, Realty Trader Talk. I'm Jordan Kane, the host, sponsored by realtytrader.com and Chaser Water. Please like, share, subscribe. I'm trying to get my subscribers up. I appreciate it. See you guys next time.